Good morning, everyone. You are watching live daily market outlook for Tuesday, 23rd of April 2013, prepared by Windsor Brokers. The main characteristic of today's trading day is the full calendar that shows a number of manufacturing and services PMIs that are basically the highlight for today. To be released for French already been released, German, Eurozone, and late in the afternoon United States. We're going to take a detailed look at the calendar in a while, just to take a brief look at the major pairs and the commodities. Euro accelerates higher at the beginning of European session after being under pressure and posting a fresh session low at 130.31. Now the pair is heading through the initial resistance at 130.67 on the en route towards our initial barrier at 131.00. Slight improvement is seen in the near-term structure. British pound from the other side stays pressured in the red territory following a failure yesterday and the overnight's failure at 153 barrier. Subsequent pullback down to 152.47 ahead of release of UK data later on sees the pair under increased pressure, with the 152 near-term base being still vulnerable as expected. And we mentioned yesterday the dollar again lost ground against Japanese yen on second approach to psychological 100 barrier and slipped lower, losing initial 99 support and dipping as low as 98.55 so far, keeping the 100 barrier so far out of reach. We mentioned yesterday that further hesitation, according to the overbought technicals, could be seen, and this proved to be correct as the pair slipped again, leaving the second attempt again without success, the second attempt to clear 100 yen barrier. From the commodities, gold and the crude oil are slightly easing during the Asian session, being at the back foot after reaching a fresh high at 89.38. June contract of US sweet crude oil dipped to 88.21 at the beginning of European session. Overall picture is still negative, with the current movements to be described as corrective consolidative action, with the levels at around 89, slightly above 89 so far, holding the upside, keeping the upside limited, with the downside base and the key support seen at 85.90. This is the low of last Thursday. As said, larger pictures bears are still in play, and as long as initial barrier holds, we might still see more pressure towards the downside. Otherwise, break above 89.40 recent highs may trigger some stronger corrective action. Gold is easing at the beginning of European and during the Asian session after hitting fresh high yesterday at 14.38, approaching 50% retracement of the entire fall from 15.90 to 13.21. That stands at approximately 14.55, 14.38 seen so far. Current easing could be still seen as corrective. We have quite good support at 1400, 1390, and these levels should contain any corrective dips in order to maintain the freshly established bullish structure on the recovery rally from 1321 last week's fresh low. This was a brief outlook of the markets. We're going to take a look now in the calendar and see what events we are going to have today. Forgot to mention quite important HSBC flash manufacturing PMI from China came at a quite disappointing 50.5 level, well below the previous release of 51.6 and the forecast at 51.4. That pushed Aussie dollar mainly and the Kiwi dollar significantly lower, as the China is Australia's number one export partner, and any slowdown that is now highlighted and signaled there by quite weak PMI data that came well below the expectation affected the down under currencies with fresh lows seen on Aussie dollar at 102.20, just ahead of 102 psychological support. Swiss trade balance came at 6 o'clock GMT, 1.9 billion Swiss francs surplus, beating the forecast at 1.73 billion and slightly below the 2 billion surplus seen in the previous release. French manufacturing PMI came at 44.4, above previous release and above 44.2 forecast, while services PMI is well above forecasted than previous levels at 44.1. German data are due at 7:30 GMT. 51.1 is the forecast for the services PMI versus the 50.9 previous release, while manufacturing PMI is expected to stay unchanged at 49. Anything below 49 would be signal that a further slowdown in Germany's economy is seen in the past month. Eurozone PMI data are due at 8 o'clock GMT. 46.8 is the manufacturing forecast for manufacturing PMI, unchanged from previous release. 46.7 services PMI versus 46.4 previous release, and that will be all from European except the UK data. 8:30 we have PSNB public sector net borrowing 14.3 billion pounds is seen release of today compared to 4.4 billion in the previous release, quite a significant improvement. CBI industrial orders expectations are due at 10 o'clock, -14 is the forecast, slightly better than -15 previous release. Canadian retail sales at 12:30, 0.3% decrease in the monthly release compared to 1% in the previous month, while core retail sales are expected to stay unchanged at 0.5%. US manufacturing PMI is due at 1300. GMT 53.8 is the forecast compared to 54.6, slight decrease according to the forecast. And the new home sales due at 1400, 416,000 units seen compared to the 411,000 units in the previous release. And Central Bank of New Zealand is going to release late in the afternoon their monetary policy decision and the interest rate decision, with the rates expected to stay unchanged at 2.5%. And this is basically all from today's economic indicators events. Of course, focus is at PMI data from Germany and the Eurozone, as well as United States, with releases to be carefully watched, as if they come along with the expectations, then it will signal that slight improvement is seen, at least staying stable. Otherwise, negative releases will signal, like in China, that a further slowdown is to be expected. From the markets, as mentioned at the beginning, euro bounced at the beginning of European session higher, though the downside is still vulnerable. 130 zone is still seen under pressure as long as we hold below 131 round figure resistance, and the last Friday's pardon, high at 131.27. This is a part of the larger range established between 130 and 132 following last week's sharp rally and quick recovery. Basically, the pair holds between 130.00 and 131.30 zone, with the neutral negative tone still seen at this point, as basically the price hovers around both 55 and the 20 days moving averages, with fresh direction expected to be seen on either break above 131.27 or loss of 130.00. As said, the near-term structure is still, studies are still slightly negatively aligned. We need to see the gain of 131 in order to avert immediate downside risk, and then 131.27, 131.40 levels in order to refocus 132. Otherwise, quite likely scenario would be a test of 130.00, break of which opens 50% retracement of the rally from 127.44 to 132.00 at 129.72, and then we have Fibonacci 61.8% retracement at 129.18, where also the 200 days moving average stands at this point, and it's reinforcing this support. So far, the diamond pattern, as we mentioned yesterday on the daily chart, has been completed with the price breaking out now, but holding still somewhere in the middle of the pattern and not showing still a strong direction. Initially, break below the trend line seen during the Asian session signaled a possible break lower. That is supposed to be according to the negative outlook of the diamond pattern. So far, we don't have confirmation of the reversal. That requires a clear break below 130.00. And from the Ichimoku studies, the daily Ichimoku cloud base currently standing at 131.00 so far limits the upside action. As we can see, the 132 brief penetration to the cloud was short-lived, and then the price dropped lower, meaning that the cloud still keeps the price pressure. Then the Tenkan-sen line is above the price again at 131.00. That overall keeps the negative tone more in play according to the daily Ichimoku studies. The next is British pound. Let the charts open. As we can see on the ADX studies, there is a rather neutral mode on the 1 hour, while the bulls on the 4 hour are running out of steam, and basically the recent recovery of 152.02, this was the low of yesterday, failed to regain 153.00, again stalled at 152.96, and subsequent dip lower still keeps the downside quite vulnerable. The hourly studies are still holding a positive tone as the price now attempts above the all three moving averages on the hourly chart, while the 4 hour indicators are still quite weak at this point, and require more action higher in order to improve the tone. 153.00 is seen as initial resistance, but more upside action to be expected on a break above 153.67, 153.78, recent double top break of which to refocus 154.10 recent peak, and then possibly to open way for extension of the recovery rally from 148.30 low of 12th of March 2013, where we have immediate resistance at 154.22, 38.2% retracement of the larger 163.80 to 148.30 descent. So far, still more focus is still seen towards the downside unless we see break above 153, and the focus is at US PSNB data that are due at 8:30 GMT, and will give some more clues about near-term price action. As we mentioned, the dollar yen is again loser at this point. Repeated attempt, as we can see on the 4 hour chart, repeated attempt at psychological 100 barrier failed yesterday at 199.87. This was the highest seen against 99.93 of the previous attempt on the 11th of April 2013, and subsequent pullback dipped as low as 98.55, just above dynamic support of 4 hours 55 days exponential moving average that currently stands at 98.40 zone, so far containing dips as 38.2% retracement at 98.32 so far stays intact, and the previous highs set 98.50 level, 98.50.40 have been briefly cracked on dip, contained the recent dips that so far stopped at 98.55, and negative tone still dominates on the hourly chart following pullback of yesterday's peak at 99.87, while 4 hour structure is holding positive tone and sees good potential for a renewed attempt higher as indicators are pointing, holding in the positive territory, and this fresh momentum is seen building up. However, break above 99 as initial barrier is required to confirm the recovery and prevent further easing of the pair's price. That may look for a test of 38.2% at 98.32, and then we have around 98.00 round figure support, and 50% retracement of the rally from 95.80 to 99.87, a break of which would again shift focus towards the lower levels and keep the 100 barrier on hold for now. Aussie dollar remains under pressure, as we said. The release of quite disappointing Chinese data pushed the pair lower. 102.20 low seen so far in the early hours of today during the Asian session, and the brief consolidated corrective action is seen as a minor at this point, as descending 20-hourly 20 days exponential moving average so far limits the downside, limits the upside, pardon, and basically the downtrend remains unobstructed for now, as hourly indicators are well in the negative territory. Overextended, slightly extended, pardon, 4-hour indicators, as we can see, MACD is quite low and shows the initial signals of bearish, bullish divergence, may trigger some corrective action. Similar situation is with the RSI, but confirmation of this requires a break above minimum 102.75, 103.00 in order to pick up the recovery, where we'll be facing the next important supports that are 103.57, last Friday's high. This is the one, and more significant is 104.00, a peak of 16th of April, as well as 50% retracement of the entire down leg from 105.81 to 102.20. So far, any stronger action is seen quite unlikely at this point, with the more focus still seen towards the downside as penetration of 102.00, with the last one of the last barriers en route to 101.14 at 102.24. Fibonacci 76.4% has been cracked on a break on a dip to 102.20. We have a next static support at 102, low of 11th of March, as well as round figure psychological support. That will open way for full retracement of the recovery rally from 101.14, low of 4th of March, to 105.81, peak of 11th of April 2013. Basically, the pair remains within the range, with either side of the range so far holding the upside, holding its levels. The range has been established in August 2012, and so far the price ranges between approximately 101.14, this is the lowest level, and 106.20, unable to break and establish a fresh direction. Now the focus is at the downside, at the lower boundary of the range that stands at 101.14. Before this, we have the previous range floor at 101.48, posted in October 2012, seen as an interim support en route towards 101.14. As said, on the upside, the only break above 103.57, 104.00 would provide relief and prevent the pair of sliding below 102 support. I think we have a small problem. Basically, yesterday I did update the oil charts. For some reason, it hasn't been saved. So allow me for a second to turn them to June. I don't know why this happened. Obviously, technical problem that could be solved within a second as we move to the June contract. This really makes me upset when it happens like this. Okay, hourly structure is now losing traction of the on the crude oil's June contract as bounce from 85.90 last week's high that peaked at 89.45, now reversing quickly, so far retracing 38.2% on test of psychological 88 support, with the more significant level seen at 87.68. This is the 50% retracement, and yesterday's spike low, a break of which is to confirm the temporary top at 89.45, and the open way for a further retracement. As I mentioned at the beginning, overall negative tone is still fully in play, despite the current recovery that failed to clear the 89.35 previous high. 89.45 seen a minor break higher as descending 55 days exponential moving average, currently at 89.76, so far maintains the bearish tone, and the price briefly break above 38.2% retracement of rally from of the descent, from 94.78 peak of 10th of April down to 85.90. This stands at 89.29, and the failure to clear this level that acts as a quite solid resistance at this point sees again more risk towards the downside. This current movements could be described as rather consolidation than correction, as overall negative tone is still keeping the downside vulnerable, and the failure to clear initial strong barrier sees again more risk towards the downside. That will be confirmed on the low, on the break below 87.68 to possibly open way down towards 86.39, and the low at 85.90 posted last week. Daily structure of crude oil is quite negative, and still sees much more risk towards the downside following a strong fall from 97.68 peak of 1st of April. That so far dipped to 85.90 and extended over 100% of its Fibonacci expansion from the wave from 97.68 we mentioned yesterday. The next target is seen at 84.65. This is Fibonacci 138.2% expansion. On the upside, the immediate resistance stands at 89.45. Then we have Fibonacci and 50% at 90.34, and then 91.39 is 61.8% retracement, above which 92 zone offers strong resistance, seen as strong dynamic resistance, seen as 200 days moving average. And a quick look at yellow metal. Let me just find it. The recovery as shown on the 4-hour chart still intact, as but we are now at the critical point, as 4-hour indicators are attempting, 4-hour MACD is attempting to break above the midline, and now indicators are starting to point lower. We can see the RSI is now pointing lower, and already below its 7 days moving average. Momentum is in descending mode. That could signal some corrective action of the recent recovery rally from 1321 to 1438 so far, retracing over 38.2% of the entire 1590 to 1321 fall, with the descending 55 days moving average capping the upside at 1444, and just ahead of important 50% retracement at 1455. Risk is seen now towards the downside and supports at 1400. This is the recent low and psychological support, as well as 1390 higher base, break of which could have quite a negative impact on the gold's price, as we are in the corrective mode of the larger descent that was triggered from 1590 sharp fall to 1391. And basically what we mentioned yesterday, strong signal is given of possible direction changing of the yellow metal from past over 10 years uptrend. Likely the price is now entering a corrective phase and reversal that will be confirmed. That already gave had some points of confirmation on the slide below 1400 and threatening 1300 level. That is better shown on the weekly chart, where we have a 38.2% retracement of the larger up move from 2001. That stands at 1290, and basically penetration of this level is to give another confirmation that the yellow metal is in descending mode. As we can see on the monthly chart, textbook failure swing has been completed, and the loss of very important and critical support at 1520 confirmed reversal. Now the corrective action is seen running out of steam at this point, and the main risk will be seen in case we lose 1400, 1390. That would bring risk again towards the downside levels, where we have 1336 and 1321, our key downside support, posted on low posted on 16th of April 2013. Conversely, any break above 1455 would provide relief and would signal a stronger recovery of sharp 1590 to 1321 fall. Basically, we have to keep an eye now on the upside at 1455 and on the downside at approximately 1490. With risk, downside risk, increased downside risk seen on a penetration below 1390, while break above 1455 would provide a more positive tone and allow for a stronger corrective action of sharp fall from 1590 to 1321. And this is all from my side. I think I spoke a lot. Now you can submit your questions. I think we have already something. No. Euro US dollar, we did already, in case you missed the action, we're going to do it again. Wow, this was a release of German data, I would say 7:30 exactly. The German manufacturing PMI came at, this was the main reason basically, the German manufacturing PMI came at disappointing 47.9 versus the 49 previous release, and the forecast that pushed the euro significantly lower. Now we are testing the 130.00 support. That increases the downside risk as the pair is attempting to break below the near-term range floor, as we can see on the 4-hour chart. 1 second to have the chart in front of you. Okay, as we can see, first of all, on the hourly, the sharp fall was seen. We had the initial recovery action up to 130.83, and then release of German data is now continuing the tradition established on the Chinese PMI data that came at quite disappointing level. Now the next is Germany, and most likely if the things continue like this, then we can see the Eurozone PMI data again coming weaker. They are all already well below the 50 level that divides growth from contraction. With further weakening, seeing more signals for the extension of the recession and the crisis that holds the Eurozone economy in the stagnation and the down move since 2008 when the crisis first time broke out. This is main reason now for the pullback, the release of disappointing German manufacturing services PMI data. Silver. Let's take a look at silver. It seems that current, I would say, rather consolidative than corrective action is coming to its end, as the upside was limited at 24.00 with the descending 20 days moving average of 4-hour chart, limiting the corrective action from 2200. This was the low of last week, posted on 16th of April, with the negative tone dominating. As we can see, all indicators are in the descending mode, and below their midlines, signaling a possible retest. The initial support was lost at 2290. Now we are looking for 2245 low of last Thursday, and then finally 2200 low of 16th of April. As the price is establishing again a negative tone following the failure of a recovery rally from 2200, as gains were limited below 38.2%. Retracement of the entire fall from 2807 to 2200. Outside this point, more downside pressure will be seen as euro pushed lower, and the dollar seems to be gaining traction again. That of course will affect also the commodities. How much it will go? I just gave you the levels: 2245, 2200, and then if we go lower, well, we need to go to the monthly. We have 2134. This is quite significant level. March 2008 high, and this will be seen as the next significant support and the target in case of loss of 2200 support. As we can see on the weekly chart, quite a negative tone is seen since 2011 peak for at 49.77. Since then, the pair is in descending mode, and again it lost its critical support that was approximately at 26 level. This was multi-year range floor. Break lower now signals that more significant corrective action is seen quite likely. And if we take the Fibonacci levels of the rally from a low of 48, this is nice, 848 low of October 2008 to the rally of to the peak of 2011 at 49.77. The price has surpassed already 61.8% pardon retracement, and basically we have good supports as mentioned previously: 2134, the peak of March 2008, and then 1822, 76.4% retracement. On the upside, let's just take a look. Basically the range tops at levels 2380, 2400 are offering initial resistance, break of which that looks quite unlikely at this point. Would open 2423, which is 38.2% Fibonacci retracement, reinforced by descending 55 days moving average. And then we have 2490, which is 50% Fibonacci retracement of the entire fall from 2784 down to 2200. Any further questions, please? Okay, if no questions for today, then I would like to thank you all and give space to our colleagues that will resume with the Arabic version. We're back tomorrow morning at the same time at 10 o'clock GMT as local Cyprus time, 7 o'clock, 10 o'clock local Cyprus time, 7 o'clock GMT. Keep an eye on the calendar, as we can see that so far good surprises were provided from Chinese and German data, and most likely scenario will be further weak data coming from Eurozone, and of course PMI data from United States during the afternoon. Wish you a nice day, and of course the most important, successful and profitable trading. Good luck.